Good afternoon, everyone, and thanks for being on our webinar. My name is Alan Vanalik. I'm an extension educator here at the University of Nebraska-Lincoln. Today is the part of the Center for Ag Profitability's weekly webinar series, which usually happens Thursday at noon Central every week. And welcome back. This is the first one for 2022. A full schedule is available at our website, which is cap.unl.edu or centerforagprofitability.unl.edu. Today's the fourth in a set of monthly webinars conducted through Nebraska Extension's Land Link program, which works to connect land seekers and landowners who are retiring and looking to find successors. Land seeker and landowner applicants are matched with the most compatible counterparts so that a mutually beneficial partnership can be forged over the course of the transition plan. For more information about the program that is available, please go to cap.unl.edu/landlink. So with the rapidly changing tax laws and ever-increasing complexity, it's more important than ever to find the right tax professional that understands the special rules that apply to farmers and ranchers to help you and your business stay in compliance and minimize your overall tax obligations. To discuss what to look for in a tax advisor to help navigate this part of your business, we have with us today Tina Barrett, Director of the Nebraska Farm Business, Inc., which works closely with farm and ranch businesses across the state on accounting, business analysis, and tax preparation, among other financial services. If you have any questions during the whole hour, make sure you type them into the chat or the Q&A, and I'll be watching that, and we'll be asking Tina as it fits. And Tina, thank you very much for being here.
Yep, I'm happy to be here. It certainly seems a fitting topic to have right after the end of the year as we start to turn the page and start thinking about taxes. So as I was trying to prepare for this, there was a few things I thought, it's really hard, even as a tax professional, to know everything there is to know about taxes. I don't think anybody can probably do that. But as a producer, I think there's some things that are really important that you as a producer should know about taxes. But again, this is one of those things that you're hiring an expert because they're going to know more than you, but there's still some things that you should know. And so some of those things that I think you should know, like simple things like a difference between a deduction and a credit. So, a deduction reduces taxable income, but a credit reduces the tax that you're owed. So anytime that we're able to maximize credits, that's a lot better than maximizing deductions. Or in other words, $1,000 deduction might get you 12% or $120 back in tax savings, but $1,000 credit is going to give you $1,000 of tax savings. So those kinds of things are important. Other things like how brackets work. So it's important to know that everybody gets a 10% bracket. It doesn't matter if you make $1 million, you're going to have a bracket that's at 10%. You're going to have a bracket that's at 12%. And so if you go, a few dollars over the 12% bracket, it's not like a cliff that all of a sudden you are paying all of your income at 22%. So, that's something I think as I work with producers, that's really important for them to understand that it's not, we talk about maximizing brackets a lot, but you still don't, it's not a cliff. Another one is that I hear a lot is that I don't want to pay capital gains tax ever. The reality is capital gains tax is better than ordinary income tax, and it's certainly better than self-employed income. And so if we can get income to be qualified for capital gains, that's actually what we do want to have happen. And understanding what triggers a capital gain, what kind of income triggers ordinary income, what kind of income triggers self-employed income is important. And it would take way more than this hour for me to in-depth describe all of these things, including how depreciation works, again, the difference between the sale of a cow and the sale of a calf, and how those kinds of things work. And so one of the things I think that a really good tax preparer could do is they should be willing and able to help teach you some of that basic tax knowledge. Maybe the last week of February is not a good time to ask them a bunch of those questions. But throughout the year, there should be a willingness to teach, because from a tax preparer standpoint, the more my clients know, the easier my job is. And so taking that time to teach it is something that I think is really important. So ask the questions, ask if you don't understand, ask them to explain it. And hopefully they can explain that to you in a way that makes sense to you. So that's my first thing that I think a good tax preparer should do is be willing to teach and be able to share that knowledge, at least in the basics of things. The other thing I thought of is that I get questions a lot is are you a CPA? Do you have to be a CPA to prepare tax returns? The other thing, that's the most commonly known designation that you can get, but an EA is an enrolled agent. But you can also just be a return preparer. You don't have to have that. So let's talk just a second about what those things mean. So a CPA is a state licensed certification. So each state's rules could be different on that. They can represent tax preparers before the IRS. They tend to have a broader focus than just taxes. So if we look at the EA column, that's a federally licensed thing. That's something the IRS does, but that focus is really on tax issues, where a CPA maybe is focusing a little bit broader on some of more accounting and financial things. Both have to pass a test. The EA test is a 3-part test. The CPA test is a 4-part test. And they both have continuing education requirements. So CPAs have to have 40 hours of continuing education each year. And the EA requirement is 72 hours every 3 years. Both have to include ethics. And the EA continuing education, again, would be all tax focused, where the CPA continuing education could have accounting and financial services as well. So those are the two main ways that you're going to see most tax preparers is either licensed as a CPA or an enrolled agent. But as of today, there is no requirement to have a designation or any education to prepare tax returns for a fee. So that's something to pay attention to. Just because a tax preparer doesn't have one of those designations doesn't mean they're not a good tax preparer. Okay, but it does mean that they don't have any requirements to do any continuing education, and they don't have any requirements to approve competency before preparing tax returns. I do have a note there that Congress is working on changing this. It was probably 4 or 5 years ago. IRS tried to put a requirement that there had to be there was going to be another level of designation that was a little bit below EA, but that you would be required to at least prove basic competency before preparing tax returns for a fee. There were some lawsuits, and the court said that the IRS didn't have the authority to do that. And so Congress is looking at giving IRS that authority. There is language in that Build Back Better bill that might be called the Human Infrastructure Bill that they've been trying to pass for several months that would give IRS that authority. So pay attention to that, because that could change things for a lot of tax return preparers. Regardless, one of the things I think a good tax preparer should do is always be learning. There is no way to know it all. It really isn't. So I think there's 2 things. One, you got to know where to find the answer. And 2, you got to be constantly learning, because things are always evolving and growing. There's a question in the chat box that asks, should it worry us that ethics education is a continuous requirement? Ethics is an interesting thing, and we have to have 2 hours of it every year. And a lot of times it's really not so much of what's the right answer, but understanding the laws that are enforced. So if I'm an enrolled agent, so I have to follow IRS's Circular 230. There's a lot of rules that are a part of that, and those are considered ethics as well. And it is just something that unfortunately, just like the legal system, there's plenty of people who take laws too far, that cross lines, maybe don't protect client data as much as they should. And all have put these rules in place because of people who have gone too far. So anyway, again, just make sure that as you're talking about your tax preparer, that they're taking those continuing education classes, that they're constantly learning, that they're signed up for newsletters and blogs that help keep them up to date on stuff that's going on. So
Tina, a question came in, and I think you said you wanted to handle them kind of as they happen. So And maybe I'm wrong on that, but anyway,
No, that's
the
perfect.
question came in and said, should it worry us that ethics education is a continuous requirement?
Yeah, I kind of we saw that one come in here. And again, it's just one of those things that the more things happen, the more rules we have to put in place to combat that. So every time we have somebody who isn't doing what they're supposed to do, everybody else gets some more regulations, and probably similar to just about everything else that we're dealing with. So then I thought, okay, so if you're going to be talking to a potential tax preparer, what questions should you ask them? And so I was trying to go through questions that we get asked on a regular basis. And I put at the top of there, what's your professional designation? Again, it doesn't have to have them. I know a lot of good tax return preparers who do not have any professional designation. They don't have a CPA, don't have an EA, but that doesn't mean they're not good at what they do. But it's important to find out that. Ask them how they get their continuing education. How many hours do you take a year? For me, that's 72 hours every 3 years. I blow way past that because there's just too much to learn and too much to know, especially in the last 3 or 4 years with so many tax laws changing. So I think it's fair to ask how often they're updating their information. One thing that we get asked a lot is, how often do you put returns on extension? Some people like that. A lot of tax prep firms, especially the larger ones, use the extension as a way to spread the workload out throughout the year. We do the majority of our work in 4 months. And so then we have months the rest of the year that it's hard to keep people employed. And so to have full-time people, it's nice to have work year round. I personally don't like extensions. I want to get that done, put a seal on that. And I have plenty of other things I do throughout the rest of the year that I don't need to fill that time with tax returns. But sometimes it's a pain for farmers, especially whose lenders are using that tax returns for renewals and things like that, that if they're not getting their tax return until September, it puts a lot of things on hold. So again, not a make or break it, but it's important to understand what that prepares normal is with extensions. And then I said, well, how do you inform clients of new tax laws? The last, again, 3 years, especially 2 years with COVID, has given us plenty to understand that it's important to know about new things as quickly as possible. As when the PPP loans and things came out, we needed to know about that, and our clients needed to know about that right away. And unfortunately for us, that was right in the middle of tax filing season when we were also already busy. But it's important to make sure that your tax preparer is going to inform you about things so that you can find out about new things that might affect you in some way. And it may be as simple as Facebook posts or Twitter, or it may be newsletters and actual letters when some of that stuff comes up. Do you do tax planning in the fall? Again, for our farm producers, that's normal. But if you get outside of farming, tax planning isn't as common. And so finding out, making sure that you're tax prepared will do tax planning in the fall as an agricultural producer is important, because that's certainly something we can really do differently than a lot of other businesses. Again, another question that's maybe not a right or wrong answer, but do you like to avoid tax or do you like to minimize tax? Because that's different. If you're going to minimize the tax paid over the course of your business, that's different than not paying any taxes today. And again, you just want to make sure that you're on the same philosophy with your tax preparer or a potential tax preparer in how that you're going to structure that, so that you can work together to make sure that your goal is achieved. And then again, it's all interesting, but I know we do things a little differently just from our background and the fact that we do a lot of analysis work and different things and focus so heavily on farmers. We do our processes a little different than some of the other large tax prep firms. So finding out when they want information from you, are you going to set up appointments in January? Are they going to do the return when you come in February? Just figuring that out. Again, making sure that that you're both happy with how that process is going to work. And then what other services do they offer? You know, tax prep is just one of many things that a lot of tax preparers provide. Do you need them to help you with their monthly accounting? Do you need them to help you with payroll? And that could be anything from just doing the W-2s and 1099s at the end of the year to actually processing payroll checks for people, doing your EFTPS deposits, all of those kinds of things. And so making sure that, again, it's a good fit for all the things that you need to have help with. And that's what they're offering. And then I had a few farm specific questions, because I think if you're in agriculture, it's really important that your tax preparer understands the wide range of special rules that come with farming. The farmer's tax guide is, hundreds of pages of special rules that only apply to farmers. So if you're interviewing a potential tax preparer who doesn't do very many farm returns, they're probably not going to know a lot of those special rules that are usually very beneficial to a farm. But either way, as a farmer, you're required to follow those special rules, and want to make sure that that's done right. So ask them how many farm returns that they prepare. And maybe how many similar to your industry. So for example, a cow-calf tax return is actually probably one of the most unique tax returns out there, because especially if you're raising cows, those are sold as a different kind of asset than a purchased cow. And those are sold as different types of income as the raised calf. So understanding those things is really important. I always joke that you need to understand the difference between a cow and a bull, but it maybe even goes a little bit deeper than that. But all those things are very unique. And then the other thing that comes with a farm return, we always talk about the fact that they're due March 1st, but that's really just to avoid an estimated tax penalty. And a lot of tax prep firms will require farmers to pay a January 15th estimate so that they can file that return by April 15th. So again, it's not right or wrong. You just want to know if they require that, or do they file returns by March 1? That would be another good question. As CPAs and EAs, we can't give out the names of our clients. That's something, again, with that code of ethics that we have to follow. But you can ask your neighbors and your friends and other colleagues who they use. And that's going to be a really good place to start too. And being able to ask friends, people that you trust who they like. So, all right. And that, again, another question, how much should tax prep cost? And again, I think it comes with that, a good tax preparer, but I think you're going to see anything from a farm tax return being anywhere from maybe $200 to $7,000. That's going to depend on the time involved, the complexity, the entity structures involved. And I think it's probably one of the things that there's no standard that we can say that this is what a tax return is going to cost. There's a lot of variation out there. But as you think about that, you just remember that your bill covers a lot more than the time entered that it takes just to enter that tax return. So good tax software is expensive, and good tax software is invaluable to making sure that we have everything done that needs to be done because of the complexity of the law. But it costs a lot of money, and that continuing education also costs a lot of money and requires a lot of time and time in addition to the fees. So, and there's support staff and all kinds of things. So you just think about that there's a lot more that goes into that tax return than just the time. So I put in here again, just that a good tax preparer is going to cost money. But at the same time, just because you spend a lot doesn't mean you're getting value. So that's why it's important that you know some of those basics so that you know if your tax preparer is a good value or not. All right. I'm going to flip the tables just a little bit here then and say, what is a good tax client? Because you can do some things to save yourself some of that money. And also think through that as you're shopping for a tax preparer, remember that not all tax preparers will take all clients. They're shopping for clients too. And so I have a good friend who says he doesn't want to do all the tax returns. He just wants to do all the good ones. And that's a really nice place to get in your career when you can pick which clients that you want to work with. So I wanted to give you some things that you can think about that you can do to help be one of those good clients for your tax preparer. And one of those is be prepared. It's really so much better for me when I come into an appointment, the client's prepared, he has all the information that I need, and we can get the job done rather than having to set up another appointment to get them more information, or it's, a multitude of texts and emails to get that through. Be organized. Be able to produce the information that your tax preparer needs. So if he needs to be able to find your 1099s, I have those in an organized format for them. Have them be matching your records. Make sure that before you hand your records to your tax preparer that the 1099s match, and that's a really helpful thing. For me, one of those things is being honest. I don't want to work with a client who's not going to tell me the truth, who wants to cheat on the tax returns. I want somebody we're going to find the best way to manage the tax liability in an honest way. So that to me is important. Being accountable is important. We all make mistakes. And it's important to me that if it's the client's error, that they're accountable for that. If it's my error, I'm going to be accountable for that. So, understanding that things happen and that maybe your tax return didn't get done by March 1st because you didn't get the information to them until February 27th. And that's just not going to be enough time, those kinds of things. And then be proactive. Get your appointments scheduled early so that you're not having to be squeezed in at the last minute. Make sure that your information's to the tax preparer before February 27th, because 2 days isn't enough if there's other things that other clients that also waited until the last minute. So being proactive and being up on those things is really important. And I put there that a good tax client will make a good tax preparer happy. And again, just remember that it's a two-way street in how that goes. So I left a lot of time for questions. So I hope you guys have questions that you can throw at me. And there is one here in the chat box. What resources would you suggest to the tax preparer looking to become more knowledgeable in farm tax planning and preparation? I think being familiar with the Farmer's Tax Guide is a really important thing. And it's actually, I did not realize that used to be an extension resource and that IRS actually adopted. And there's a committee of several of my friends and colleagues who are incredibly intelligent farm tax professionals who put that together every year with the IRS and really teach the IRS what they need to know about farm tax laws, because again, we're a small minority in the big scope of things. So that's always a really great place. Other things would be the Center for Ag Law Taxation out of Iowa State does an excellent job of keeping up on farm tax laws and planning. Roger McGowan out of, I'm going to blank now, he's in Kansas now. The college starts with a W, but if you Google Roger McGowan, he also has a blog, keeps up on the law side of things, does an excellent job. So there's lots of those kinds of resources out there. And most of the universities that are the land grant universities have a income tax school every year. That's also a good resource for a lot of those things. I have another question here. With multiple family members involved in an operation, is it beneficial to have an actual entity like an LLC versus an informal arrangement filing on a Schedule F? So that's a really broad question. Entity planning is one of my favorite things to do because there's so many ways to structure a farm in different ways. An LLC or having some kind of central operating can really simplify things rather than having multiple splits, having to take that seed bill and split it 4 or 5 different ways. But if you don't want to farm together, if that's not your goal, if you want to have that independence, then farming in one spot is not gonna be good. And so we don't want to put you around that block and potentially cause family issues if that's not what your family's interested in. So unfortunately, the entity stuff is such a personalized individual thing that it's really hard to say, but it's a good conversation to have, and hopefully your tax preparer would be able to have that conversation with you. Another question: what are good resources for understanding the tax ramifications of an EQIP grant? Again, most EQIP grants are going to be taxable, but there's a couple different ways, and again, depends on what's happening there. If the EQIP grant is like cost share on a pivot, what happens is the cost of that pivot is reduced. So if you spend $100,000 on a pivot and the EQIP program is paying $30,000, then you're going to put a $70,000 pivot on your depreciation schedule. If it's a program that maybe is, I'm trying to think of something else that would be more general in nature, it might just be something that's included on your Schedule F, but regardless, that is going to be taxable. Really, up until the PPP loans, we didn't really have any farm programs that didn't have a taxable nature to them. But one thing you'd want to watch for on that EQIP again is that we don't put a $100,000 pivot and a $30,000 Schedule F income. There's some self-employment tax implications to that. There's personal property tax implications to that. And depending on what we have for depreciation rules, we might not be able to offset that. So we want to make sure that that's the case. All right, let me make sure I didn't miss anything here.
Okay, so first of all, I'll help you out.
Okay,
I looked
perfect.
it up while you were figuring. I didn't remember where Roger was at either. Roger McCowan is at Washburn University School of Law, and he does their tax stuff.
Yeah, and like I said,
I'll
he's got
help
a
you
really
with that.
great
And now you go to
blog.
Q&A, you got a couple things, and I would start with the second one first.
Okay, in the Q&A.
Yes.
Okay, let me pull that one up. All right. Let's see. How is capital gains tax cheaper than regular tax? That is right. So capital gains tax is always a lower rate than the ordinary income tax. So again, it's one of those things that gets really confused as people try and do everything they can to avoid a capital gains tax. But if you're in the 10 or 12% bracket, for example, the capital gains rate is 0. So if you're in the 22 to, and it's not quite perfect, but from there on up to about 400,000 of income, the capital gains rate is 15%, when the ordinary rates are at minimum 22. And then at max, they're 20%, and the max income tax rate is 39 or 37% right now. And so capital gains tax is always cheaper, and it always replaces that income tax. So it's not like you have to pay the income tax plus a capital gains tax. And that again is one of those misconceptions that that a lot of people have. And let's see. Let's see if I can sort through these questions here. Or do you want to sort through them, Alan, and ask me, or how do you want to? Oh, you're still muted. So, Alan, you're muted.
I'm sorry.
I know that's just like the most common phrase in the last 2 years, right?
The biggest mistake of all. You have a couple more in the chat, and you have three more in the chat, and you have 2 more in the chat, and you have 1 more over in the Q&A. So
okay.
Well, let's start with the Q&A one. How are informal partnerships handled? Just split into separate individuals, such as Schedules Fs, or like a partnership, or file a partnership return?
Well, so an informal partnership, yeah, it's going to be split. I mean, you have to be careful with a lot of things with an informal partnership from a legal standpoint. If you're going to be doing something like that, I would recommend getting something more structured set up. But if it's informal and there's no entity established, it would be just splitting onto separate Schedule Fs.
Back over the chat, we're going to leave that one from Kellen kind of towards last because that's a good summary question.
Yep.
But what's the best resource to find tax preparers who specialize in farm tax works in various regions of Nebraska? Word of mouth is good, but hoping for a more structured resource.
Yeah, I don't know that there is anything more structured out there. I mean, a lot of tax preparers in Nebraska are going to have some experience with farms. So I think either asking, again, how many returns they do, what kind of farm returns that they do, what's the scope of how many farm returns that they do? Is it just, some hobby farms outside of Lincoln and Omaha? That's not what we're looking for. We're wanting to make sure that they're working with large operating businesses, those kinds of things. So yeah, unfortunately, I don't know of a good formalized structure of any source that you could go to. IRS has a listing of preparers who have PTINs, which are just an identification number, but again, they're not going to show competency or specialization with that. So
here's another question that came in on the chat. I'm a landowner, not the operator. I have a cash rent income and receive income from hay sale. I have some depreciation scheduled and will add depreciation for replacing an irrigation well this tax year. I'd like to find a new tax preparer. Are you, Tina, or another tax preparer at your firm taking new clients? Do you even do taxes at Nebraska Farm Inc? Yeah, I think you do.
Oh, we do a lot of taxes. Yeah, it's a loaded question. We've had a lot of new clients. You can give us our office a call. We'll talk about the complexity of that and see if we can get that taken care of for you if you're interested. You can go to our website. It's just nfbi.net. So nebraskafarmbusinessinc.net, and our contact information would be there.
Okay, another one came in. I think it's my friend Paul Hay from Beatrice, says, give some examples of the role an accountant as a part of the farm advising team with the financial officer, investment advisor, attorney, and I would also probably include the banker on that.
Yeah. I think the accountant plays a big role, and I mean, I think we can do a lot of good things. I think sometimes we can get too hung up on the tax side of things, playing too important of a role, and having too much of the business put on taxes. So example, we spend all of our time worrying about how to not recognize any income, when in the long run, we might be better off recognizing some tax, reducing debt, and getting the other goals of the operation in place. So I oftentimes will say that you shouldn't make management decisions because of tax implications, but you shouldn't also make a management decision without understanding the tax consequences of it. So it becomes just another tool in the toolbox, another piece of the puzzle, another part of the team in helping you make good decisions.
I know from my work and working with farm families on estate plans, it's really critical that all these people that they're listed here or that I read off are a part of a team to know what each other's doing, because we can have things fall apart pretty quickly if we put together an estate plan but don't also include the financial advisor, an insurance agent, the banker, and your CPA. It could be a mess. Another step. Yeah, go ahead.
I was just gonna say, each one of those experts is coming at this in a different way, and so it's important to have all those perspectives. As a tax preparer, I might know the operation better than some of the others. It just depends on the level of involvement I have with them. But having those at least annual discussions about what's going on with the business, where they want things to go, that gives me a little different insight than maybe their investment advisor, who maybe hasn't been as intimately involved with the business side of things. So yeah, every person brings something different and can become a really valuable meeting when we get everybody together.
Another thing that came in was for estate planning for an individual farmer, is it changing to an LLC or a trust a good idea? I'll just make the comment that it depends. It depends on your situation. It depends on your operation. It depends on what you're trying to get done. I mean, what I typically see is if we're passing the farm on to another family member, that tends to be more LLC than trust. If we're giving the farm to our family members, but they're not farmers, that tends to be more trust. But again, it depends. A good lawyer, my big take on this, the longer I do this, the more I think you don't worry about what tool the lawyer uses. If you have a good lawyer, they'll apply the right tool to your situation. And Tina, you can take it from there.
Yeah, and I agree. It really depends on what you're trying to accomplish and where you're trying to take those assets. But I would recommend getting your accountant and your attorney in the same room and having these discussions. Talk about where you want it to go. I oftentimes say, give me your dream of how you want this to look, and then we can put the tools around it to make that happen, or the best that we can. But we can take your operation in a completely wrong direction if you don't know where you want it to look like when you're done, or what your end goal is. So you tell me what it's supposed to look like, and then what you want it to do, and then we can put the tools around it to make that happen. And that could be very different for different operations. So.
And I have realized that every farmer, the majority of farmers don't ever plan to fully retire. They never have anything else that they want to do rather than just farm. I get that, but we haven't been able to avoid the pie in box yet. So what happens to your stuff? So that's, what happens to your stuff is your end game. What's going to happen at the end. So have a plan for that and think about that a little bit.
Yeah.
Another thing that came in on the Q&A side was, can you talk more about deductions versus credits?
Sure. Again, it's just two major things that we deal with in the tax side of things, and deductions can be anything from your seed bill, that's a deduction, to your child. I'm sorry, I'm trying to think of maybe even your child's college education. That can come as a deduction. That could also come as a credit. Those are all different things. But anytime we can get a credit instead of a deduction, we want to take that, because a $1,000 credit is going to get you more than $1,000 deduction. And one of the things it's really hard to say with a deduction how much a $1,000 deduction is worth, because it depends on what income tax bracket you're in. It depends on if that's self-employed or just an ordinary income deduction. So we certainly want to take all the deductions that we have that are right and we're legally able to do. But a deduction is only a percentage. So, a lot of times I'll hear people will say, I've got to, spend some money at the end of the year to avoid tax. And so we got to think about that, because if you're spending, again, $10,000 and you're in a low income tax bracket and it's not subject to self-employment taxes, you might only be getting 10% of that in return. You might be better off to pay the 10% tax and have 90% of those dollars in your pocket. So, again, just two different things that it's always good to understand the difference between.
So here's one that came in on the Q&A side. Can you refer some farm bankruptcies attorneys for Nebraska? I have some bad experience with local attorneys doing very poorly on bankruptcy, apparently, and considering the tax implication, they created a mess. You want to take that one on? I have one suggestion, but if you want to take that on first.
Well, I was going to say, I've been really blessed, and I haven't had a bankruptcy to deal with one of my clients for 20 years. So I'm not sure I'm the best to answer that. But making sure that this is not a normal attorney job. This is something that you definitely want somebody who specializes in bankruptcies to take on, because there is a lot of details that have to be watched, and a lot of things that need to be watched. So, but Alan, did you have a suggestion that maybe
Well, I don't have a specific. I think you call the rural response hotline. I'm putting the number in right now. Okay, there it is. I put it in. Okay, send. Okay, there it goes. It's on the Q&A side. It's okay. Answered live. But the rural response line hotline, I'll type that number in over here too. 800-464-0258 is the rural response hotline, and they can help get you to a bankruptcy attorney. They actually, I think Joe Hawbaker is still working for them. And I've had several people tell me that Joe's the best ag bankruptcy attorney in the state. I'm not trying to drum up business for Joe. I think he's busy, but that would be one resource that you could try and call the rural response hotline and see if you can get some help that way.
Yeah, and I'm sure if Joe is busy, he would know who would be good to work with outside of that too. So that would be a good resource that way as well. So.
Okay, that's the 800 numbers for the rural response hotline.
Perfect.
Is there any software or tools that you have found especially useful for farm tax planning and prep?
Well, so again, like I said, tax software is expensive. There's most of the small, cheaper ones get eaten up by the big ones pretty fast. So, we use a software called the CERT. It's an Intuit product. We've used that for quite a while now, really enjoy that. But it wouldn't be something that you'd want to buy to do, 1 or 2 tax returns. And tax planning again is really hard. We've settled on a spreadsheet that I've made, which isn't 100% perfect by any means. But there's a lot of things going on. So you want to make sure that they understand those special farm rules if you're using any of those softwares, to make sure that you're using the right kind of depreciation and the right estimated tax questions and all those kinds of things that again are chock full of that farmer's tax guide and special rules. So, but I don't really know of any tools that would be readily available outside of some of those expensive software options.
So last question I have at this point, and again, if you have more questions, type in either the chat or the Q&A. We're finding on both places, but it is, out of everything that you've mentioned, what are 1 or 2 key takeaways for producers? I've got one, but you start first.
Okay, well, my biggest is make sure that the tax preparer has farm tax experience. That's my biggest thing. And that's why I don't like to do returns that aren't related to farm, because I don't know those rules as well. And so almost everything that we do is either tied to a farmer or is a farm return, and we stay in that wheelhouse. And so make sure that somebody understands those rules, and that's probably the biggest thing I can say. What do you got?
Well, all I would say to that is simply this: if whoever you're working with, whether it's a lawyer or a tax preparer, or I don't care what professional you're working with, if you don't understand what they're doing to you, and if you understand what they're telling you, and if they can't explain it to you very well, find a different one. They're all over the place. I mean, we can find other tax preparers, we can find other CPAs, find somebody that you can work with. I don't want them to be your best buddy, but I want them to be somebody that you can relate to well enough that you can have a conversation in there, take the time to explain to you what's going on so that you can make good decisions for your operation. So my advice is simply, if you don't understand what they're doing to you, find somebody different. You can always find somebody different. It's absolutely correct.
Yeah.
Now here's you talked about.
Go ahead. Let me add on to that just 1 second, Alan, because there's a lot of times you think that your operation is so complex that nobody else can figure it out, and that's probably not true. And there's times it's much easier if I created the entity mess to be able to continue it, but that doesn't mean that nobody else can figure that out. So don't be afraid of that either. On the flip side of that, working with somebody for 20 years is one of the favorite parts of my job, and building those relationships. But sometimes that line can get a little muddy too when you do get to be too good of friends, or and a client is asking for something that shouldn't be done. And so, making sure that you keep that line as a trusted advisor and colleague and friend and person that's involved in your business, but making sure you don't ask too much of them as well. So yeah, it's a good relationship, but it can go the other way. So all right.
One other question came in while we were working on that one, and it says you talked about deductions, but what is a credit?
Yep, sorry about that. Sometimes I get talking on one thing and forget the other half of the question. So thanks for asking. So a credit reduces the tax that you do. So most of the time we're going to see those like in a child tax credit, again, education credits, dependent care credits. There's lots of credits out there, earned income credits. Some of those are refundable, some of those are not. So some credits will only offset income tax that you owe, and that doesn't include Social Security taxes. And then the refundable credits will offset Social Security taxes and potentially get you a refund. So those credits come off as actual tax dollars owed. So we want to watch those non-refundable ones to make sure that we're recognizing enough income to maximize those credits and we're not leaving those on the table. And those kinds of things. But so a deduction reduces taxable income, a credit reduces the tax that you owe. Hopefully that helps.
Very good. You know, so it's oh, let's see, what did I want to ask you? Oh, yeah. I have a question for you.
Mm-hmm.
And I didn't have to do this on the line, but that's fine. We'll do it quick right here. How much, okay, so if a farmer is ending their business, in other words, they have no error to the operation, they're going to have to end their business someday. How long do you suggest that they take to get that in place so they don't end up with this great big tax consequence at the end of their farming operation? Versus how long should if a farmer does have a son or daughter or a family member coming back to their operation, and they have to get stuff kind of getting processed and transferred and doing all that sort of thing, how long do you suggest that they take? Because I think it's a different length of time. And I wanted to get your input on that because I know what I've been advising people and maybe I'm wrong. So I need to find out what you think about the whole thing.
My general rule is at least 5 years, but that always is followed up by it depends. So if I've got an operation who has $1 million of carryover grain and is recognizing $50,000 a year, 5 years isn't going to cut it. There's still going to be a lot of sticker shock there. So it depends on what you've done from a tax planning standpoint. If you have deferred all of your income and have prepaid all of next year's expenses and have maximized all depreciation options to avoid tax for as long as you have, you've got to take a long time. It's going to take a long time to unwind that. If you haven't been as aggressive in avoiding tax, that 5-year window might work pretty well. And then from a transfer standpoint, again, I think that depends on how they're going to transfer the business. So if they're transferring the entire operation and the operating entity, you probably don't need as much time. But if you're going to keep your carryover grain and only transfer the equipment to the next generation, we still have that same deferred tax liability out there that needs to be managed. So how you're going to transfer the business, how much you're giving to the next generation, how it's structured really changes that answer. But at a minimum, it takes 5 years, and it could easily take 10.
Well, I've been saying to end your business, you better be at least looking at 5 years, and to pass your business on, it'd be better if you're out closer to 10 years. But maybe I'm wrong on that.
Well,
but it doesn't sound like I'm too far off.
Yeah, and again, it's really just going to depend mostly on how aggressive you've avoided tax, but also how you want to transfer that business. And if you're transferring the entire thing and the carryover grain as part of that, or if you're just transferring parts of that business, and then you're still got to deal with that deferred tax liability. So again, that's why these tax webinars are so hard to do, because there's so many that come to it depends, which is why we settled on things to find a trusted tax advisor, because it really is important to have that person walking alongside with you and making sure that we don't step in anything we don't want to.
Right. I agree. That's very good. All right. Seeing no other questions, I think maybe we can wrap this up. Are you okay with that, Tina?
That sounds perfect.
Yeah. All right, here we go. Thank you everyone for joining us today. A recording of the webinar we posted at cap.unl.edu, the Center for Ag Profitability website, where you can register for other upcoming webinars. And the past webinars are also available at that site. Please click the link at the chat box to make sure you take a brief 3-question survey to provide feedback on this webinar and inform you and get you informed about our upcoming sessions. We'd love to have your data. All you need is your email. We're not selling it to anyone. We just want to let you know what else is coming up. Again, thanks for joining us, and Tina, thanks very much for being our program today. Appreciate it. All right.
Perfect.
I think Ryan is going to end us. Ryan, you may end us. Cool.